Are you finding Portland's real estate market just a little bit confusing? Well, you're in good company because so does just about everyone else. Nervous about your equity? Is it building? Is it holding steady? Is it evaporating? Let's see if we can answer some of those questions for you. I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District, and as usual, I've got our weekly market update for the full metro area. That's Southwest Washington down to Portland and all of the bedroom communities taken together. If you're a first-time viewer of our videos, this is a sampling that we have been following for just about 3 years. So let's get into the numbers. When we're comparing the average sale price this year versus roughly the same time period last year, we are starting to see a trend. If you've been following the videos, you'll recall that back in January, we were having some pretty grim numbers, probably the worst numbers we've seen since the Great Recession. About 5 weeks ago, the average sale price was almost 13% below where it was the same time period last year. The next week it was only 9% below, the following week only 8% below, the next week minus 1.6%, and this week we moved back into the black at plus 0.9%, so roughly 1% higher this year than the same time period last year than the average sale price. The median also rallied up rather significantly, up 8% versus the previous week, and that took the median out of negative territory and put it back in the black as well. It's up 1.6% versus roughly the same time period last year. Why do I think we're starting to see a trend? I think because we have enough data points to say that the market is moving in a specific direction now. If you take a look at these two graphs, the top one is the average sale price week by week. And if you go back to January 17th, it looks like we hit a bottom and that we've been rising ever since then. It's showing a pretty steady trend upwards, and that's been pretty consistent for the last 4 weeks or so. Very quickly, the reason for that, I think, is because those deals that went under contract in November and December, high interest rates, not a lot of showings, nervous sellers, buyers getting really good deals out of the sellers, and we're seeing the results of those negotiations as those deals closed in January. I think we probably worked through the lion's share of those, and we're moving on to deals that went under contract in January. If you recall, back in January, we saw a shift in the market. Buyers returned to the market with a lot more energy, driven likely by lower interest rates. And as we got to about, I want to say 3-4 weeks ago, rates dropped below the 6% mark. So Wells Fargo, I watch their national website every day. They have been consistently over the last 4 weeks in that 5.75 to 5.875 range for their note rate on the 30-year fixed, which is a lot less than the 7% we were seeing back in November. We started seeing properties go with multiple offers, 2 offers, 4 offers, 7 offers, depending on the price point and the neighborhood and the condition of the home. And I think we're going to start seeing more of those deals closing over the next couple of weeks. From a boots on the ground perspective, buyer demand still seems pretty high. In the bottom chart here, you can see that buyer demand pretty much bottomed out at the beginning of January 3rd, and it's been on the rise ever since then. In addition to that, the number of new listings hitting the market still isn't very strong. I thought we might see kind of a push of buyers rushing to get to the market while the getting is good right now, before the balance of the competition shows up in our spring buying season, but we're still not seeing that. I'm not seeing a lot of new listings, and I'm seeing still a lot of properties going under contract and selling. This number here, 417 for new listings, will make a little bit more sense when we look at the number of new pendings that we had for the same time period. But for now, the inventory continues to slide. It's continued to slide week after week after week compared to last year at this time, where the inventory bottomed out and then started to rise. I suspect that we're going to see that change as we do get into February and into March, when we see more sellers coming to the market. The number of deals that went under contract last week, our measure of buyer demand, was pretty good. It's up 11% from where it was the previous week. 603 contracts or deals went under contract during this last week. And that's a strong number when we compare it to the number of new listings that hit the market at 417. It's also a strong number when we compare it to last year. I checked my notes, and last year at this time, the number of new contracts was only 735. So just a bit higher than what we have this year. Keep in mind that last year was one of our strongest seller's advantage markets. Buyers were simply gobbling up everything that was coming to the market. And of course, the reason for that is we had rates that were in the 2s and 3s at that time. For the first time this last week, we did see a little bump up in the number of foreclosures and short sales. Short sales are those properties that are in pre-foreclosure. Foreclosures are the properties that have already been foreclosed upon, and the bank is now in possession of those homes. So ever since we've started tracking that number has been really low and pretty stable just about across the board, month after month after month. Right now we have, if we combine both of them, around 66 short sales and foreclosures out of a total of around 6,000 active and pending listings, so still a really minimal amount. But we did see a bump up, and it's something that I've been watching. One of the things that I did do is I reached out to Old Republic Title, which is one of the title and escrow companies here in Portland, and had them start sending me the notice of default lists. And something that we used to follow when we were back in the Great Recession, just as a measure to see what was going on with the market, how many properties were still going into default, and how many were actually getting foreclosed upon. When I started looking at these numbers, I noticed something interesting. There were only about 40 of them, and they were divided into 3 categories, 2 that I was familiar with, and one that I actually had to call the title company and say, what the heck is that? So, notice of default. The homeowner is 30 days late on their payment. The bank issues this notice of default and says, hey, you gotta come current, or otherwise in the next 3 months we're gonna foreclose on you. The second category is the notice of trustee sale. That's where the bank issues a notice to the homeowner and says, hey, in 30 days we're going to take your property and auction it off on the courthouse steps. You got 30 days to bring yourself current, otherwise that's going to happen. Then there's this third category called notice of sale, and that's something that I had not seen before, and certainly hadn't seen during the Great Recession. And what that is a home that was in default, but the sellers had enough equity, they were able to sell the home, make good on their loan even though they were behind, and walk away with the balance of the equity in their pockets. So of the roughly 40, actually 41 of these properties that did make the list this last week, 12 of them were notices of default, 18 of them were notices of trustee sale, and 11 of them were notices of sale. So actually 11 of these properties that were in default were able to sell and had enough equity to make good on the loan to the bank. As with all of the statistics, I will keep an eye on these notices, these official notices, and let you know if I start to see a trend forming or movement in one direction or another. So that's what I have for you this week. Thank you so much for watching to the very end. If you like the content, please give me a thumbs up. If you have not followed, please follow this channel. As I always say, all real estate is local. We have markets inside markets inside markets. If you're curious about what's going on in your neck of the woods, your municipality, your neighborhood, your subdivision, or even your specific condo complex, feel free to reach out to me. I'm more than happy to share what we know and do a bit of research for you. Thank you so much again for watching to the very end, and we'll see you next week.